Ever felt like you're caught in a financial whirlwind? Like every month, something unexpected pops up, and you're left scrambling? You're not alone. We've all been there. Maybe it's a sudden car repair, a medical bill, or just needing a little extra cash to bridge the gap between paychecks. Whatever it is, the question becomes, where do you turn? In today's world, online lending platforms have become a popular option, promising quick and convenient access to funds. But with so many choices, how do you know which one is right for you? And more importantly, how do you know if you even qualify? Today, we're diving deep into one specific platform, MogoMoney, and breaking down their eligibility criteria. Let's be honest, navigating the world of loans can feel like deciphering a secret code. There's jargon, fine print, and a whole lot of questions. But fear not. We're here to demystify the process and give you a clear understanding of what it takes to get approved for a MogoMoney loan. Before we jump into the specifics, let's take a moment to understand why eligibility criteria exist in the first place. These criteria aren't designed to exclude people, they're in place to ensure responsible lending practices. Lenders need to assess the risk involved in providing a loan, and this involves evaluating your financial stability and ability to repay. Think of it like this: if you were lending money to a friend, you'd want to know they're likely to pay you back, right? Lenders operate on the same principle, but on a much larger scale. Now, let's get down to the nitty-gritty. What are the key eligibility criteria for MogoMoney? 1. Age requirement. Like most financial institutions, MogoMoney has a minimum age requirement. Typically, you'll need to be at least 18 or 19 years old, depending on the specific product and provincial regulations. This is a standard requirement across the lending industry, ensuring that borrowers are legally adults and capable of entering into a financial agreement. 2. Residency status. MogoMoney primarily serves residents of Canada. You'll need to provide proof of Canadian residency, which can include documents like a driver's license, a utility bill, or a government-issued identification card. This requirement ensures that the platform is operating within its designated service area and complying with local regulations. 3. Income and employment. This is where things get a bit more nuanced. MogoMoney, like other lenders, needs to assess your ability to repay the loan. This involves evaluating your income and employment status. Stable income, you'll generally need to demonstrate a consistent source of income. This doesn't necessarily mean you have to be employed full-time. Self-employed individuals, freelancers, and those receiving government benefits may also qualify, provided they can demonstrate a stable and reliable income stream. Proof of income, be prepared to provide documentation verifying your income, such as pay stubs, bank statements, or tax returns. The specific documents required may vary depending on your income source and the loan amount. Employment history, while not always a strict requirement, a stable employment history can strengthen your application. Lenders often view consistent employment as an indicator of financial stability. 4. Credit history. Your credit history plays a significant role in the loan approval process. MogoMoney, like many lenders, will review your credit report to assess your creditworthiness. Credit score. Your credit score is a numerical representation of your credit history, ranging from 300 to 900. A higher credit score generally indicates a lower risk to lenders. While MogoMoney may consider applicants with less than perfect credit, a good credit score can increase your chances of approval and potentially secure a lower interest rate. Credit report. Your credit report provides a detailed overview of your credit history, including your payment history, outstanding debts, and credit inquiries. Lenders use this information to assess your track record of managing credit responsibly. Impact of past defaults, bankruptcies, or other negative credit events can impact your eligibility. However, MogoMoney may still consider your application, depending on the severity and recency of these events. 5. Banking information. You'll need to provide your banking information, including your account number and transit number. This is necessary for MogoMoney to deposit the loan funds into your account and set up automatic repayments. Active bank account. You'll need an active checking account in your name. Online banking access. In many cases, you may need to provide online banking credentials to verify your account information. This streamlines the application process and ensures the accuracy of your banking details. 6. Debt-to-income ratio, DTI. Your debt-to-income ratio is the percentage of your monthly income that goes towards paying off debts. Lenders use this ratio to assess your ability to handle additional debt. Calculating DTI. To calculate your DTI, divide your total monthly debt payments by your gross monthly income. A lower DTI generally indicates a lower risk to lenders. MogoMoney's DTI requirements. While MogoMoney may not publicly disclose their exact DTI requirements, a lower DTI will generally improve your chances of approval. 7. Loan purpose and amount. The purpose of your loan and the amount you're requesting can also influence the approval process. Loan purpose. While MogoMoney may not restrict the use of loan funds, providing a clear and legitimate reason for your loan can strengthen your application. Loan amount. The loan amount you're requesting should align with your income and financial capacity. Requesting an excessively large loan amount relative to your income may raise red flags. Tips for improving your eligibility. Improve your credit score. Demonstrate stable income. Reduce your debt-to-income ratio. Provide accurate information. Gather necessary documents. By understanding these eligibility criteria, you can better assess your chances of approval and take steps to improve your financial profile. Remember, responsible borrowing is key to maintaining financial well-being. Always evaluate your financial needs carefully and choose a loan that aligns with your budget and repayment capacity. With that said, thanks for watching, and until next time.